Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we will take you through the next half an hour or so of trade. Like the name suggests, this is a show geared towards getting all of your stock-related questions answered, and to that end, you can send all of those questions to us on that number on your screen, or in fact on any one of our social media platforms. And what a day it's been for the equity markets today. We're within touching distance of all-time highs. In fact, we could well close at an all-time high, and 24,000 is on the cards. We still haven't hit that mark. Let's in fact pull up the benchmark. It's been quite a bit of chop and churn, and if you pull up the intraday chart, you will see that we have come off the high point of the day at one point in the session, but we've recovered from that low point as well, and hovering above that 23,900 mark in trade today, just about 70 points or so away from 24,000, and what a landmark that would be. The broader market's doing quite well and in fact are gaining more than the benchmark. At least the mid-cap index is at this point. The small-cap index has come off quite sharply from the high point of the day. At one point, it was up as much as 0.7%. The market breadth was in favor of the advances, but then that gap has been closed very substantially. And in fact, at this juncture, you have more declines than advances. But forget about everything else. The big sector that you have to focus on today, and a few names in that sector, is the cement space. And the reason being is that there has been a large trade. There has been a significant amount of stake of India Cements that has exchanged hands, and it has come to light, in fact, exclusive information that NDTV Profit has picked up, that R.K. Damani, a significant stakeholder in India Cements to this point, has probably sold his entire stake to UltraTech Cement. The details of that, the confirmation of that, will likely come through over the course of the day. This is a significant deal, but it is a non-controlling interest. So what does it mean for minority investors in India Cements, and what does it mean for UltraTech Cement? To give you some perspective and to tell you about the valuation that the deal puts India Cements at, I'm joined by Agam Vakil. Agam has been looking at it since morning. Agam, what can you tell us at this point?
Right. So, well, from what we understand, of course, is that about a little over 7 crore shares were traded earlier on in block deals in India Cement, and UltraTech Cement was the company which, in fact, bought this stake in India Cement. The stake comes to roughly 23% of your overall equity. Now, sources who are in the know have suggested that at the moment it is, in fact, Radhakishan Damani and related entities who have sold this stake in India Cement at 267 rupees per share. Based on that, the valuation that we are getting as far as the enterprise value to ton currently stands at roughly around 7,500 rupees per ton. That in turn comes to roughly $90 and that is largely in line with the kind of metrics that we have seen of late. Remember that the Penna Cement acquisition was also made roughly around $91. And perhaps this is in line with what we are working with. That's as far as the valuations are concerned. The next few steps will, of course, will depend on the confirmation, and that confirmation of the seller as well will come through towards the end of today. But all in all, this is how the deal has panned out. It's going to be a wait and watch as to what UltraTech Cement has in mind with respect to India Cement going forward.
Thanks so much, Agam, for getting us those details. Let's jump straight to our experts. We're joined by Vineet Bolinjkar, who's Head of Research at Ventura Securities, as well as Ayush Mehta, Technical Research Analyst at Nirmal Bang. Thank you so much, gentlemen, for taking the time. Coming straight to you, Vineet, on this deal. It's quite an interesting one, particularly because India Cement, the fundamentals weren't the best. It is a company that was struggling with capacity utilization, pricing pressure in the south markets as well. And as of now, what we know is that this is not something that is going to immediately bolster the capacity for UltraTech Cement, because it is not something that will, at this point, turn into control. So what is in it for UltraTech Cement, one, and what is in it for the shareholders of India Cement?
So a couple of things is that one is that overhead supply, which the money might be looking to sell in the markets, has been absorbed by very strong hands. So you can rest assured that the trend will stay there. And with UltraTech coming in, there is a possibility that over a period of time, this gets converted into an acquisition. UltraTech may not want to acquire this at this point in time because they have significant capacities in the region. And their game would most probably be that if anybody else wants to acquire this, you make it expensive for them because you have a significant stake out there.
Okay, so then from that perspective, what would you do as a shareholder and prospective shareholder of both of these two companies, or rather somebody that is looking to invest into the cement space? What would your preferred pick be? And if you are a prospective investor or an investor in UltraTech or India Cements, what should your approach be?
So, I would go with my sector's top pick, that is Sagar Cement in the southern region, rather than play India Cements, because they have really been struggling to get their act together. And we believe that Sagar Cement is one of the best players out there who have added value. And we expect that company to do well, since it is well placed to grow from the two states of Orissa and Andhra Pradesh in terms of allocation of plants.
Thank you so much, Vineet, for that perspective. So, Vineet's pick remains Sagar Cement in the cement space. But let's start off with the questions. The first one is from Snigdha, who's writing in from Delhi. The question is on CESC. That's the name of the share that we're talking about. Ayush, coming to you on this one. They bought the shares at a price of 75 rupees. It has significantly been higher in the last 5 sessions. Do you see more upside from here, or should you book profits?
Well, CESC is performing quite well in the intraday 60-minute chart. There's a good flat pattern, and once it crosses 170, there's going to be a new rally which can take the stock towards 195. So at these levels, I would recommend to trade with trading stop loss by keeping a trading stop loss at 162. Since she's holding from a lower level, so 162 is a very good stop loss here, and can be holded for a target of 185, 190.
Okay, we're coming back to you, Ayush, on Larsen & Toubro. And this is a question coming from Dheeraj. He's looking to invest, or rather he's looking to buy a significant quantity. He's looking to put as much as 10 lakh down for a period of 6 months. Would you suggest a buy at the current level, and what kind of levels would you look at?
Well, L&T is consolidating right now. There's an average support at the lower levels, which is at around 3540 odd levels. I think that is a very good buying zone. I would recommend to divide the capital from 3540 from 3540 to 3500. Between these 50 points, he can definitely invest into the stock, and the long-term view is very positive here. The first targets I'm looking here is for 4,000 levels.
All right. Next counter is Aegis Logistics. This one's from Murli. They bought the counter at a price of 458. Significant profit there in the counter, Vineet. Do you happen to track this counter? And if you do, would you suggest booking profit, considering there is a good amount of profit here?
No, I would suggest that the clients, investors hold on to their stock. It's a super stock company. They understand their business very well. They've got their capital allocation on track, and they're looking to, double their asset base. And they're one of the most frugal, most cost economic companies globally in terms of gas storage. So I believe that they will do very well. LPG has got a bright future in the country, and they're looking to add capacity. So if you keep holding on to this stock for a few years, I think you'll get massive value on it.
Okay, all right. That's the view on Aegis. And do you like any others in the logistics space? Because there are few to choose from, and I'm curious about whether you would pick Aegis first or something else.
So there are specific plays. So Aegis is a very specific play on gas. The other specific play that we like is Tarachand, which is very specific to the renewable energy space, and it's quite available. It's a small cap company with great growth prospects, and I think that is another stock that can do really well.
The next question is from Priyanka, and she's writing in from Bengaluru. She's asking about Sigachi Industries, which is trading at 72.6, or rather, which she bought at levels of 72.6, I think, and it's currently trading below the buy price. So she's wondering what to do. I'll come back to you on the charts, Ayush. How does it look, and would you hold on to this?
Looking at the charts of Sigachi, it has been in a consolidation from quite some time now. Well, there's a very strong support zone which is at around 59 levels, which is its 200-day moving average. Till the time it is holding that on the closing basis, I would still recommend to hold the stock. The big rally will continue in this stock only above 70 levels. So till the time it is holding 59 on closing basis, definitely should hold the stock.
The next counter is Bharat Electronics. The question is from Sai, who's writing in from Andhra Pradesh. They bought the counter at a price of 317 rupees. Vineet, coming to you on this one, it seems like they've bought at elevated levels, and we've seen a bit of correction in the counter. If you can pull up the chart for the last week, you'll see a little bit of correction. The stock has come down. What would you suggest to somebody who's maybe holding from a longer term perspective?
I think you should hold on to this stock. This company will tend to do well. We are seeing the Modi government come back in place. And since the elections, we have seen them get the cabinet that they want. Their speaker is theirs. The deputy speaker is also theirs. And a number of policies are now being rolled out. There is no such real opposition to that. The members of the syndicate are looking to support the government through and through. So I think the PSU momentum will come back, and BL is a very important play from the perspective of electronic manufacturing, defense, and also from other manufacturing areas. So I think this is one stock that you should hold on and not get too perturbed with the slight loss that you are facing currently.
All right, we'll slip into a short break now, but stick with us, Vineet and Ayush. We'll be back and we'll take more questions on the other side. Stay tuned. Welcome back. You're tuned into Ask Profit. We were taking your questions, and if you haven't written to us, do write to us on any of our social media channels. Even a long-term query or a short-term trade that you want to take, and we'll take your questions. Ayush, coming to you on EMS Limited. We have a question from Nikhat, who's writing in from Bangalore. The question is, should you buy EMS at this point? You look at the way the stock has gone up. It's about 50% up in the last 6 months itself. Do you see this as a good buying opportunity, or should you wait for some correction?
Talking about EMS, it's a recent listing. I think it was listed in September 2023 only. Right now, I don't have much data, and stock has moved significantly up. So, by looking at the current data, what I have, I'm looking for some retracement. If I get it around 570 levels, then definitely that's a very good buying opportunity. Right now, I wouldn't recommend to buy it at these levels.
Point. I'm just going to go across to you as well, Vineet. Any fundamental view on this? EMS players, by and large, have been in focus for obvious reasons, but this particular counter?
It's a water stock listed fairly recently, and they have been getting good traction in terms of business as well as margins. So I would go with this stock more as a momentum play than really want to accumulate it as part of my portfolio.
Back to you on another counter. Inox Green. Oh, actually, no, this is a short-term query. Inox Green is a question coming in from Sushila. Sushila is writing in from Bellary and has bought at levels of 169, 333 shares. What are the targets in the short term is a question. Ayush, what does it look like on the charts?
Talking about Inox Green, I had recommended this stock day before yesterday at 170 levels only, and my target was at 180, which was a short-term target. But again, Inox Green is looking good at current levels, be it weekly or monthly chart. There's a good black pattern formation on its monthly chart. So definitely should hold this stock for the first. The short-term targets we are looking here is at 200 levels.
Understood. The next question is Moschip Technologies. That's the counter. The question is coming in from Swastik, who's writing in from Budapest. They bought the shares at a price of 98 first, and then some accumulation at 179 as well. The stock is currently trading at around 278 rupees. Ayush, coming back to you on this one, the stock has, what a rally it has been in the last 1 month. It's doubled in the last 1 month. Would you suggest booking profits at this juncture?
Talking about Moschip, I think it's a BSE only stock, as I cannot find it on NSE. It's currently trading at around 279 levels, down from 325 levels. It has shown a phenomenal rally with volumes, but I wouldn't recommend buying at these levels because my risk reward is not favorable, and since it's a BSE only stock, so I don't think so whether it will be very volatile or not from now on. So I think the ideal buying zone is at around 200 levels. If you get it at around 200 levels, then it is a buying zone. Otherwise, those who have the position, I would recommend to book profits here.
All right, tuning in all the way from Budapest. That's some commitment. Thanks so much for joining in. From relatively closer, from Surat, we've got Vaibhav, who's asking about Vedanta, and he's wondering whether he can invest a sizable chunk, as much as 17,000 rupees. He's looking to invest for the long term. A few overhangs with regard to the ownership, right, Vineet? But would you say that it's still a good play fundamentally?
No, definitely. I think, on a longer term basis, we are going to see metals come into deficit, and Vedanta is going to be one of the biggest beneficiaries of that. Definitely would go long on this stock, but I would want to stagger my quantities and buy it in a creeping manner so that, I get a better input price.
All right. Vineet, coming back to you on Jupiter Wagons, the question is from Karti. The question is, should you buy at these levels, considering the rally in railway stocks, including Jupiter Wagons in the last 1 year? Would you suggest buying right now?
I think it's a great portfolio stock to own. Maybe a little late in the, wanting to buy it. But yes, you can go with a reduced allocation on this stock.
Okay. Reduced allocation on Jupiter Wagons, and part of the group of stocks that has run up quite substantially. A group of stocks that has not run up very substantially is the IT pack and frontline IT counters. Among them, Tata Consultancy Services. So some money from Coimbatore is holding on to Tata Consultancy Services at this juncture. And he says that he's at cost, more or less. He's wondering whether to hold for the next 2 years. Ayush, what are the technical levels suggesting?
Talking about TCS, TCS has shown a good flag pattern formation on this daily chart, and it has given a breakout of 50-day moving average, currently around 390 to 3900 levels. But the long-term charts are positive, be it weekly or monthly, so I would recommend to definitely hold the stock. The first target I'm looking here is 4,200 levels.
All right, Ayush, the next counter is Happiest Minds Technologies. The question is from Raj. The question is it's about 5% of their portfolio. Now, should you buy at these levels is a question, considering, they have already bought the counter at 823 and the target that they're looking at is 1,000 rupees. We saw a bit of correction in the counter after a block trade. But do you see that sort of upside happening for the stock?
Well, it's very difficult to comment whether it's going to go 1,000 right now. It has shown a good profit booking from those levels and currently trading at around 825, but it is at the average of 100-day and 50-day, which is at around these levels only. So I would recommend to hold the stock with a stop loss of 820 rupees, which is, I think, 5 more rupees from here. If that is broken, then I would recommend to exit because I think it can break 800 levels as well.
Got it. All right. A few stocks for you to consider. Vineet, you don't need to talk about all of them, but if any of them catch your ear, do let me know. This is a question from Satish. He's looking at buying 1 or 2 stocks for the next 2 to 3 years, and the stocks that he has listed are Shriram Pistons, Precall Limited, Sansera Engineering, and Motherson Wiring.
So I'll go with Shriram Piston and Sansera Engineering.
So out of those two, therefore, what is the kind of rationale that you're seeing, and what are the fundamental reasons why you're saying that you should go for those two?
So Shriram Piston has done a great play in remodeling their portfolio to be suited for EVs. It's a low equity based stock doing very well, good margins. And Sansera is a play on the India manufacturing, outsourced manufacturing, and they're very, very good with technology. They are focused on aerospace and they're doing a great job about it. However, this will be a slow moving counter.
All right, got it. The next question is from Utsav, who's writing in from Mumbai. Ayush, coming to you on this one. The counter is Norsil, and the question is, why hasn't it performed in the rally? And would you suggest? Okay, that's the only question. But so it seems like they're already holding the counter. What should you do with the counter if you're already holding it?
Norsil have shown some profit booking at higher levels at from 3 rupees. Currently, there's a support of 267. If someone can hold for 10 more rupees, I think that will be a very strict stop loss here. So I think you should hold it for 10 more rupees by keeping a strict stop loss of 267.
Shilpa has got a couple of questions. I will choose to take one though, Shilpa, and I'm focusing on Apollo Hospitals. Ayush, she's bought at levels of 6,250. The stock is currently trading below that, but not by a very large margin. She's wondering what to do for the short term. What would the strategy be?
Talking about Apollo Hospital, it has got a weekly trendline support at around 6,000 levels, so which is 130 rupees from here. Although it's a very big support zone, I don't think so it will break 6,000 level, and I recommend to continue to hold the stock. I think she will make the profit in the stock. It can go above 6,500 as well. The only thing is 6,000 levels are very important here.
All right. The next counter is Lemon Tree. The question is from Ramesh. Vineet, would you suggest buying Lemon Tree at these levels? Brokerages seem to be constructive on this counter from a longer term perspective.
Can I recommend another stock? I think a PJ group of hotels looks very good, and you'll get a better valuation from that stock, better realization.
Okay, so I've not looked at APJ specifically, but Vineet, based on what I've seen on Lemon Tree, they are kind of transitioning the way that they operate, right? They're moving into a different. So rather than owning off all of the keys, they're moving to a more management style and leasing out of their properties. Is that it? Or no, they're moving into subcontraction. Am I right?
Yeah. So they're moving more towards adding a portfolio of rooms which is more managed than owned. And that is a reasonable strategy which is going on, which is we call the asset light strategy. They should definitely do well. Hotels and tourism is a very booming sector. But Lemon Tree and Apij have the same ARRs mostly, and Apij has got a very, very good lineup of hotels which are getting operational. It is cheaper than Lemon Tree, and you can put on a good 50% upside on this stock faster than what you would gain in Lemon Tree.
Interesting perspective. Thanks for clarifying, Vineet. Worry Renewables. We've got a question from Sujit. Bought it. Let's pull the chart up just so that I know what is. Yeah, all right. So it bought at levels of 2012 or thereabouts. It's currently trading at 1900 plus. What is the potential upside from this point? Ayush, on the charts?
Well, I don't have the data of this stock. So
Any coverage, Vineet, on the fundamentals? What would you do with something like this?
No, we don't have coverage on this, but I can definitely tell you that it has run up too far too fast. The stock is going to consolidate. It can lose a little value, but for the long run, I think with the next few years momentum that is going to play out in solar and wind, I think Waaree Renewables will do very well.
All right. Thank you so much, Vineet, for that perspective. And with that, we are we're out of time, and but we'll take more questions tomorrow. So do keep writing to us your queries. And thank you so much, Vineet and Ayush, for joining us and for answering those questions for us. And viewers, thanks for tuning in. We'll be back tomorrow. As I mentioned, do keep writing to us your queries on the WhatsApp number or on any of our social media channels. But until then, we have lots more lined up for you on NDTV Profit. Stay tuned.
Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks in the sectors which are buzzing in trade. But before that, a quick look at markets, and they are looking good right now. It does seem like the Nifty, which is extremely choppy today, is currently managing to sustain in the green, up by around 0.4%.